Are you ready for what's going to be a really interesting week in the financial markets? I'm Mike Swanson. I run the website WallStreetWindow.com. And the odds are that you're watching this video because you got an email from me telling you that it's up and on YouTube. Now, if you're not on my free email list, my stock trading digest comes up for the opening bell. Scroll below this video and you'll find a link to join it. I'm going to talk about three stocks that I really got my eye on this week. But before we do that, I want to talk about the overall picture in the stock market. You see, as far as I know, I'm the only person that started to warn on the market in 2021, turned bearish New Year's 2022, and remained a bear all the way down in 2022. In fact, I was shorting stocks and I was warning every time the market rallied that it was a fake out, that it was a trap, to ignore Cathie Wood, to ignore the gurus telling you the Fed's going to pivot, make everything go up. All that turned out to be completely wrong, and there's no evidence of it in the market. As far as I know, I'm the only such bear who is now bullish, the only one that is now bullish on the markets. And the reason why is because I don't aim in trying to predict the future. To me, market analysis is about identifying when the trends change and then adapting to that. So I'm not short. Instead, I am long and bought even more after New Year's. Why? In 2021, the internals of the market turned down as the stock market averages went up. And starting in October, they formed a positive divergence. The internals began to go up while the market continued to go down. And they then improved even more as each week went by. And you saw the video I did last week, probably, about Walter Deemer's breadth thrust indicator. That is an example of what happens when the internals health really takes off. So here we are. And let me show you some charts I'm looking at, and we'll get right into it. So this is what everyone is looking at this weekend, the S&P 500 and this trend line going down. It's all over Twitter. If you're looking at the markets, you're probably looking at it too, because resistance downtrends like this matter. And this acted as resistance, obviously in August, obviously in December. And then if you look at and then last week, we came off of it again on Wednesday. And by the close on Wednesday, I saw many people calling that the top and calling for a significant decline. And they also made note that there were sell signals on some of the oscillator indicators. I've got the daily stochastics above. It crossed went above 80 to signal overbought and crossed below 80 on Wednesday. That's a sell signal. And as you can see, in December, the sell signal resulted in a drop. In August, the sell signal resulted in a big drop. In June, a drop. In January, a drop. And I frankly used those overbought readings and sell signals last year to take short positions from time to time. But this time I did not. In fact, I did more buying, just a little bit, on Thursday and Friday personally. So I'm doing completely different things than what I did last year, and I'm ignoring the sell signals. And I even got feedback from a couple of people telling me, whoa, I don't think so. Or they're saying, I want confirmation. And the confirmation everyone is looking for is to see the S&P 500 close above the downtrend line. Then if that happens, people who are worried that this rally isn't real will then buy. They will, in fact, chase as the market goes higher and higher and higher. And that is what, in the end, creates rallies. But we've seen the internals vastly improve, on this rally in ways they never did last year. In fact, they continue to disintegrate. That's what's different. It's not when I say these things that I'm bullish and I believe the market's going to go up, I'm not trying to predict the future. I'm saying this because I believe the trend change because the internals tell me that. And that's, to me, what's important. And I change with what the market tells me is going on. But there's something bigger happening that you really need to know about than this chart here. Look at this. This is the GDX gold stock index. And notice that it got overbought in December, and the stochastics went above 80, and GDX didn't fall. Instead, it consolidated, and now this month it's been going up again. It's above its June high. But notice what happened. In November, it rallied to the green line. That's the 200-day moving average, and the rally paused there. And that's when the sell signal happened. Then the second breakout took place. That's typical action when a new bull market starts, or at least a big rally. Now, when I say I think the stock market's a new bull market, I don't think we're going to go up like we did from 2009 to 2020. I'm looking for a big 1-year return, and then we'll have to see about the next year. And that 1-year return is from the lows set, in October. I think we can get the S&P up to the 4,600 level before the end of the year, based on a strong rally develop, this rally continuing. But the GDX is important for another reason. I just want to point out to you that what has happened is the GDX is already going up. It's already broken away from the 200-day moving average. S&P 500 closed right on it. It's still acting as resistance, and it will have to close above the blue trend line to stop acting as resistance. But it's acted as resistance, for over 12 months. That's the very definition of a bear market, when a market is trading below the 200-day moving average, and that moving average is acting as resistance. So close above the blue trend line will end the bear market, especially if you rally and break away above it, which is what GDX has done. GDX is not in a bear market, and it broke out already. But this is what I want to tell you. GDX is the gold stock ETF. The price of gold has broken out above the 200-day moving average. Gold is now right below its April high, clearly above the June high. It's broken out into a big, giant rally already. So has the emerging markets ETF, EEM. Yeah, it rallied up to the 200-day moving average, paused in December, broke out again. It has cleared all resistance, cleared. And that's what gold's done. That's what mining stocks done. That's what this ETF EEM has done, which tracks emerging markets outside the United States. And European markets have done the same. They have rallied to the 200-day moving average in November, paused, boom, a breakout in January, clearly broken out in a new bull market. And the market in Japan is doing that now. It rallied to the 200-day moving average, and last week broke through the December high. The trend lines, if we drew them on here, all broken on European markets, all broken in Japan, China, it's broken there. And when you look at individual stocks, not the Teslas, not the Metas, not the fad stocks of yesteryear, but what's leading the market now, where the leadership shifted, and it's broad-based. That's why the internals have improved. You see this. You see stocks at new 52-week highs, such as BHP Group Limited, Silver, Southern Copper. You can find dozens of hundreds of stocks doing well, broken out in bull markets. So when we look at the S&P 500, what you have to realize is so many markets, so many sectors already in bull markets. And the funny thing about this is exactly what happened in the first quarter of 2009. In the first quarter of 2009, gold turned up, Asia turned up, emerging markets turned up, mining stocks turned up, while the S&P 500 actually continued lower and then really melted down that March for a final bottom. But during that final 3-month, 90-day decline in the S&P and the NASDAQ, other markets were already going up. The same thing is happening now. Bull markets have launched around the world. It's just that the S&P 500 hasn't yet done it. I believe that the S&P 500 is going to follow these other markets up, that these other markets are the leaders of the year, and the U.S. stock market as a whole, or the averages as a whole, the S&P and the NASDAQ are laggards. They are following what's going on in the rest of the world this year instead of leading it. And that's why when you see these emerging markets, you saw Japan go up last week, it's a reason, if all you own is the S&P, to be hopeful that the S&P can follow and participate. And I think it will. So this is why this is going to be a very interesting week to see what happens with that trend line. And I think this month, hopefully this week, it's going to be busted out, and people's attitude of skepticism and doubt about the reality of how good this rally can be will start to fade away, and people will be jumping on board. And it's that chasing that drives the market up. So 3 stocks I want to share with you. I own Newmont, and Newmont is a major big cap mining stock. Now you can see it took a giant hit from April to July, and then in November it fell, and it's rallied to the 200-day moving average. It's now pausing. I own Newmont. Newmont pays a dividend of around 5%. I believe it's going to be at a new all-time high, breaking the April high, within 12 months. I'm excited to be a shareholder in Newmont. Now, I know most people that watch my videos are in the United States, and they are completely focused on the NASDAQ. So I personally am not interested myself in buying the NASDAQ 100. And I have zero interest in buying horrible laggards like Tesla. But I want to tell you what I believe inside the NASDAQ, what can help the NASDAQ out. Because I do think the NASDAQ will rally. I just don't think it's going to go up to the high. It's going to lag the leadership everywhere that's already beginning everywhere else. But it can rally. The rally, Tesla can bounce. Tesla's still so far away from the 200-day moving average. I don't know if it's going to get above it this year. So the theme is new leadership. But that also means new leadership can emerge inside the technology sector. There can be stocks and sectors that come alive in ways they had not done for some time. And I want to point some of those out. I'm going to point to you the technology sector that I think can do well this year, that will outperform Tesla, that outperform Meta, that outperform the NASDAQ 100, the QQQs that you're looking at here. I want to show you the tech sector that I think will do the best this year. It is the semiconductor sector. And the ETF SMH tracks this sector. This sector is already above the 200-day moving average. This sector is now outperforming the NASDAQ 100. And here it is. It's in a good position to break out through the December high. It's already above the 200-day moving average. And if you're looking for a stock, NVIDIA would be one stock I would play in that sector. It's a semiconductor stock. It's a very volatile stock. Whereas I don't think Tesla is going to be able to get above the 200-day moving average. NVIDIA is already above it, and that puts NVIDIA in a position where it could go to its March high within 12 months, or 12 and a half or something. Now, another interesting stock that's not really on people's radar screen is eBay. eBay has a similar chart pattern as NVIDIA. It's also a big cap NASDAQ stock. And I think it's a stock that can be a market leader inside the NASDAQ. So we got bull markets, big rallies all around the world in gold, in mining stocks, likely to spread to the S&P 500 with the bull trigger if we can close above that blue trend line. And I think we can. And if that happens, then more buying will come into the U.S. stock market, the S&P, the NASDAQ. But that buying, I believe, will generate leadership in semiconductors, in stocks such as NVIDIA, in stocks such as eBay. So 3 stocks to watch this week: Newmont, eBay, NVIDIA. I already own Newmont. Don't own the other 2 yet. We'll see. I've already got lots of positions. So I don't know if I'm going to buy more. Again, I get tempted when I look through the charts to just buy. But I gotta at some point stop, because I'm more invested than most people are at this point in these markets on the long side. So anyway, if you like this video, hit the like button so I know to make another one. And if you want to get the next video, and you're new to me on YouTube, hit the subscribe button, hit the bell next to it, and YouTube will send you an alert as soon as that next video is up. And let's see how things unfold this week in the markets.